Hi, everyone. My name is Nicholas Timashuk. I am CEO of UFuture, and it is my honor and pleasure today to once again hold a very exciting and interesting panel within the format of Insights of Kiev, launched by Kiev International Economic Forum. And here with me is a fascinating panel. I'm really looking forward to our discussion. And with me here is Mаттeo Patroné, the Managing Director of EBRD, and Олена Кошарна, the CEO of Horizon Capital, and Alexander Pisaruk, the Chairman of the Board of Raiffeisen Bank Aval in Ukraine. Thank you once again, everyone, for sparing time and joining this conversation. I know that even though we're all on quarantine, I suspect all of you are up to your neck with work, and just as I am. I think my hours have just become longer because there is no border between office and home now. As soon as you wake up, you're in the office. At least this is the truth with me. And it leads me to my first blitz question, a quick question to all of you, which is the same. How in your organizations work has changed and will change even after the quarantine? Because I'm getting very opposite signals from different organizations. Some say that they will significantly, dramatically reinvent their workspaces, schedule for their staff. Some say that they are looking forward just to getting back to what they used to have in terms of their work routine. How is it in your organizations? Leanna, let's start with you.
Well, thank you, Nicholas. First of all, it's wonderful to be here today. The last time we saw each other, I think, was in Davos. And that seems like a lifetime ago. Obviously, what is happening now is unprecedented. It's unprecedented, and what makes it unprecedented is that you've got this now crisis against the backdrop of a health crisis. And the health crisis makes employees, employers, people change their behavior. Until we see a peg in the health crisis, until we know that people can meet, interact, go to conferences, fly easily, until we know that you can do those things and not contract coronavirus and expose your family, friends, employees, colleagues, then you're going to see people's behavior continue to change. So we'll see how long this is, but in terms of our organization, I mean, look, Horizon Capital is a private equity fund manager. Our offices are here in Kiev, so everyone is here. We have closed our offices. I mean, we do have people who have access to their offices, but at the same time, we transitioned in March completely to remote work. We continue to interact together via Teams, via virtual meetings, continue to stay within social quarantine, but do the walking in the parks, having the discussions with founders, with individuals, supporting the companies as much as we can. So in terms of our work, what we do in substance, which is, seeking visionary founders, evaluating deals, the art and the science, the relationships, none of that has changed. How we do it has. More virtual, more one-on-ones. In terms of flying, I mean, I used to fly, 2-3 times a month. I've been grounded since, this all began. So I do think that that will continue for some time after. We'll have our first virtual limited partner meeting in May for our new fund. That is always a meeting that we've had in person. That will be virtual this year. So it is different. At the same time, once the dust clears, once it's clear the health crisis that the risks aren't as high as they seem to be right now, I think people will look at the best elements and what they want to continue. I know a lot of IT companies are looking at, do we need so much office space? Yeah. Many of our employees can work from home, and I believe every CEO is looking at that. I'm certainly looking at it. Some people, in general, people are very productive, very focused, very engaged, and some of those people will continue to work to some extent remote. Others cannot, and every CEO is looking at that from a case-to-case basis. So to pull it around. In substance, things have changed. Things are very similar. The approach will be modified.
Understood. Thank you, Lena. Alexandra, what about you? You have a massive organization in Ukraine across all the country, not just Kiev. How does it work for you?
Well, thank you very much, Nicholas. First of all, I agree with everything Lena said. I think what she said is actually probably applicable to many industry sectors, including banking. Yes, we will gradually go back to normal in some time, but it will be a new normal. It's not going to be exactly the same how it used to be. First of all, we basically will go back in a staged manner. So we developed a 4-stage plan of gradual return of the staff to the office, but at the last stage, the percentage of staff which will go back will not be the same as it used to be. We roughly think that will be 60% of the staff will go back physically to the office, whereby before the crisis, it always was 85 to 90%, taking into account the illness and vacations and holidays and stuff like that. So it's going to be different. So it will be a lot more digital work going forward. And that is a good thing. We also having a close look at our distribution mix, the mix of physical branches and digital channels. We clearly saw that coronavirus accelerated the move to digital across all client segments and across all industries. So obviously that will have an impact on the distribution mix going forward. So we're careful looking at our branches, the number, locations, the format, business model, so and the mix as such. So these things will change, and they, I think, will never get back to the world we used to have before the corona crisis in this respect.
Interesting. Matteo, how about you? What do you think?
Well, very much the same as Lena and Alex. I completely concur with them. The BRD has the peculiarity of having a big headquarters in London and then more than 40 offices spread around our countries of operations. And we took the view back in March that in order to safeguard the well-being of our staff, we would have closed all the offices across our region, and we would have shifted to working from home. And this is actually working very well, to be honest, probably because of what we do. And we had a bit of a rough couple of weeks at the beginning because our IT systems were a bit unstable, but I must say that our IT team has done wonders in stabilizing them, and now things are working very well. And so we keep saying that it's not business as usual, but actually is business a bit more than usual because of what we are and our role in our countries of operation. So we have put in place a number of programs that maybe we can touch upon later on in this discussion. And we are implementing them. We are holding meetings with our clients, meetings with our institutional counterparts. I've never been so close in contact with my teams in the region because I have more time to do that than because I don't need to travel anymore. Of course, I miss my traveling schedule a bit. Meetings in person are always more effective. Yes, indeed. But at the same time, that gives me more space to organize Zoom conference calls with the teams in Yerevan, in Baku, and obviously in Kiev. So we are more in contact than we were before, paradoxically.
Yeah. Well, thank you for that. You know what? When I and Yuri, when we thought about a possibility to hold this panel once again, unfortunately, Jean-Jacques from EIB couldn't join us. I was really fascinated because just several months ago, we were discussing investment, trends, potential crisis, and here we are. So we can actually pick up on the same questions, but I'm sure answers will be pretty different these days. So, Lena, starting with you, let's get to business now. Now, it's not a secret that after the crisis of 2008, I think private equity has been the king of investment, right? In a lot of ways, private equity substituted banks that had become much more limited after the 2008 financial crisis. But now we see that top of private equity companies in the world are losing probably only trillions in their equity values across different asset classes. Now, where do you see in general today in a post-corona crisis world, private equity? Will it be the same or will it not?
Look, I'm a big proponent for private equity. I'm a big proponent for industry. You said private equity was king after 2008. I think private equity will be king during this crisis and after this crisis. And the reason why is because private equity is sitting on 1.4 trillion in dry powder. That is enormous. At a time, you know, when you have any crisis, then capital is important. Access to cash, liquidity is extremely important. We look at the cost, you know, the price of debt, which keeps on coming down. But obviously, investors will continue to look at diversifying their investments, and private equity as an important alternative asset class is going to play a role. Private equity has dry powder. They, post-2008, created extremely efficient value creation teams. I mean, so you have operating partners. It's not just capital that private equity is putting in, but they're putting in, you know, lots of teams that help with whether it's cost optimization, whether it's with looking at supply chain efficiencies. But they're doing much more value creation than they were doing before 2008. What's important though is I want to distinguish between private equity, what I call classic private equity, and private equity, which in some markets has received a bad name, you know, for itself. And classic private equity, the way it's done here in Ukraine, is really about investing in growth. It's growth equity. You're coming in, you're investing alongside the entrepreneurs, you're helping to grow their businesses, and you have a long-term time horizon to do it. You're not looking at 3 months, 6 months, 1 year, 2 years. You're looking at 5 to 10 years. In some markets, you have certain private equity houses where it's all about levering up a company. And, you know, that's not a classic private equity approach. That's an approach that some houses have taken. And I think that that's a model that is not going to work in the new environment. It will continue, of course. You know, every GP has their strategy. But if I look at our market, this is our market. I mean, we've invested over 700 million in 150 companies through 4 funds in this market. In this market, leverage needs to be low. Leverage needs to be low. You know, we've invested through, now this is the 3rd crisis, right? I mean, you know, all of EBRD and Raiffeisen, Nicholas, you and UFutures, I mean, you're all long-term investors, you're long-term players. I mean, we all remember the days, the 10 years before 2004. We all remember the days post 2008. Ukrainian companies have, in the last 5 years, had to deal with a crisis that didn't exist in the rest of the world. You know, Ukrainian companies are extremely well positioned for this crisis, in my books. You know, when we look across our portfolio, when we look at the 15 companies that we've backed through the various funds, you know, we see that the last 5 years have made them lean, mean, operationally efficient, low leverage, looking at their creating natural currency hedges within their structure. They're exporting throughout the world. They're keeping their costs to a very competitive level. I think they're in a very good position. So in general, private equity, if you're pursuing classic private equity strategies with the dry powder you have, with the operational know-how that you have, and what you offer to entrepreneurs, which is the most important, then I think you're going to do really well. You know, and you still see, I mean, you mentioned Apollo, you mentioned, you know, others.
Berkshire Hathaway, you know, they lost, just recently announced complete exit from all the airlines, and I think booked up to 50 billion loss on their portfolio.
Well, but Nicholas, also look at the Reliance. Look at the Reliance Geo deal. Silver Lake, Facebook, and Vista Equity, 8 billion for a 13% stake in an Indian telecom. That was just announced post-crisis. So look, I think crises, while they have a downside for those who have been used to maybe living in, they can allow themselves to not be operationally efficient, to be kind of fatter than
growth, right?
Exactly, that's right, that's right. you know, but there's a lot of opportunities. There's opportunities, and private equity is very well positioned to capitalize and also to offer equity to companies who want to keep their leverage low, maybe want to restructure their balance sheet, want to have a partner who will help them grow through the crisis and post-crisis.
Thank you, Elena. Thanks a lot. Matteo, the next question is to you. It's also more on the macro level. You know, I've even written a notepad on that for the last several months, we've been living in a controversial signal environment where on the one hand, we have unprecedented volume of liquidity poured onto the market. And that dry powder that Lena was talking about, really unprecedented. But the damage done to the economies, to GDPs, to consumption and demand, most importantly, is so big that IMF and the likes of Ray Dalio are speaking about one in a century recession, the biggest one since the Great Depression that we're entering. And in my opinion, this is not because of the lack of liquidity. Obviously, there is no lack of liquidity, and there is no issue of a lot of bad borrowers like it was before 2008. Rather, it's a question of structural change in the demand. People will just change their demand habits and patterns, and they will consume a lot of products and services in a very different way, and will demand it in a very different way than before. So in your opinion, with all that liquidity on the market, will we avoid the financial crisis and the credit crisis or not?
Well, I think there are a number of factors to be taken into account to get to a proxy of our response to a very complicated question. First of all, you have the health crisis. How long the crisis will last? If we gonna go towards the route of a relaxation, do we gonna have further spikes down the road? And some countries that are going in that direction are actually witnessing an increase of cases as we speak, including in the region I'm responsible for in the BRD. So that would play the obvious major role in the equation. And then, yes, you mentioned it's mainly a demand crisis, but they actually started as a supply chain crisis because manufacturers couldn't get raw material or semi-products or components from China. So you have a combination of the two. Indeed, it's a demand crisis, in particular in some of our countries in our markets. And there are also other factors that some of these economies are very much reliant on one sector only, or specifically on one sector. Take the case of Croatia or Greece or Georgia and the tourism sector. The tourism is 20% of the GDP in Georgia. What's going to happen in that country if that specific sector is not supported? And indeed, the Georgian authorities are doing whatever it takes really to support it. And then there are also other economies which are going to suffer from a double whammy, if you like, with the health crisis and the commodity crisis, in particular the hydrocarbon crisis. Take Russia, or take Azerbaijan, to stay closer to my own region. But also, to some extent, also Ukraine and other places like Armenia, where maybe they will not suffer from an hydrocarbon crisis, but they will suffer from a commodity price crisis. And being a commodity exporter, clearly that will have a compounded effect. And again, taking the region of the BRD as a whole, you have the issue of remittances, which are a big component in the balance of payments of these countries. And indeed, Ukraine is not an exception to that.
Yeah.
So overall, indeed, for us, the way we see it is that there will be a deep recession this year, and the way we see it on across the region of operation of the BRD is going to be around 4.3%, but that should 3.5%, but that should also show a rebound in 2021 of about 4.5%. So it's going to be a V, or if you like, U crisis, the U-shaped crisis. And the region I'm responsible for is going to have, in our scenario, again, depending on the length of the health crisis, a similar pattern. So the way we see it is that we're going to have a contraction of GDP in the Eastern Europe and Caucasus region of 4.5%, with a rebound again of 4.5% in 2021. And Ukraine is not going to be different. In the way we see Ukraine is about 4.5% reduction of GDP, with a rebound of 5% in 2021. Obviously, all these projections are subject to unprecedented uncertainty because of the reasons I mentioned. The way we see Ukraine in particular is that the supply chain issue has not affected Ukraine that much, because Ukraine is still in the process of getting integrated in the global value chain. So it's very much a demand-driven crisis, because the purchasing power of Ukrainians has reduced dramatically, but also because external demand has decreased. And that will bring, obviously, a ramification to the fiscal revenue, and therefore there will be also a budget repercussion on that, and that will pose an issue of macroeconomic stability, which has to be solved through the IMF SBA transaction, which hopefully is going to be finalized soon. And the news we got yesterday of the approval of the banking law, and maybe Alex can comment on that, I think is a very good news in that sense.
Thank you.
I would stop. But if you may, the only last comment I would make at this stage is that there is a light at the end of the tunnel. And one of the perspectives that we have is, and in particular because indeed there is liquidity in the market, there is dry powder in the private equity sector, including for our markets. The supply chain crisis could be an opportunity for a number of the economies in Eastern Europe, including Ukraine, given the tremendous human capital we have in the country. So maybe Western companies will think about onshoring a number of production facilities back from Far East to Europe, and Ukraine could be a good destination for that if obviously the investment climate continues to improve.
Yeah, I would like to resonate with what you've said. We are hoping exactly for that, because we've invested part of our portfolio in industry, in actual manufacturing facilities and industrial parks. And this is exactly what we're hoping for. And actually, in one of our enterprises, Planck Electrotechnic, that produces wiring devices for households like light switches and power sockets, we saw a surge during the quarantine above 30%, exactly because of the option of Chinese and other imports, and we are the only ones in Ukraine producing it. It's amazing, because I didn't realize that there's only one plant in the entire Ukraine producing such basic goods. So there is an opportunity, and hopefully that banks like EBRD will be supporting this local initiative from entrepreneurs to substitute and localize domestic production. Thank you, Matteo. Alexander, now the question to you. First of all, definitely, if you can, please comment on the bank law that has been adopted, your opinion about that. But a more broader question, do you think that the Ukrainian banking sector will withstand this crisis? What is your current assessment of the banking sector in Ukraine? And most importantly, will it be able in these days, in this environment, to support the Ukrainian entrepreneurs to provide that badly needed liquidity on the market? You know, just before this panel, I was reading some of the data, and there is a notion which says that to quickly reboot the economy, we really need more credit, more lending at the market. And some figures compare Ukraine to other countries, relation of credit to GDP. For instance, in Poland, currently it's 52%, in Turkey 69%, South Korea 150%, in China 161%, USA 186%, and Ukraine now is 34% ratio credit to GDP. And over the last 10 years, it has actually come down from 90% ratio in 2009 to current 34%. I'm sorry for such a wide, broad question, but would like you to answer as best as you can on all of those aspects. Thank you.
Thank you, Nicholas. Let's start with your second question, probably about Ukrainian banking sector. And I think in this respect, it's important to mention that this time, in this crisis, the banking sector around the world, in all countries actually, is not a source of this crisis, is not a problem, but rather is a part of the solution. I think that wasn't really the case in 2008 during the global financial crisis, but since then, due to a massive amount of regulatory work and the changed regulatory landscape, the bank has boosted capital, has boosted liquidity buffers. So at this point, the banking sector was probably in the best shape going into this crisis compared to many, many years, right? So the same is actually true for Ukraine. Mm-hmm. Ukrainian banking sector, I basically know this too well, having worked at the National Bank of Ukraine in 2014, is incomparably better shape than back in 2014 or even back in 2008. So banking sector has sufficient capital and liquidity buffers to sustain this crisis. I'm pretty sure about it. What helps this assessment is basically the fact that Ukraine as a country entered into this crisis in the best shape, I guess, over the last 30 years. And I'm quoting Matteo's colleague as a regional EBRD economist, who I believe said that in the interview this morning. So yes, Ukraine as a country is in the macro framework is in better shape. Ukrainian banking sector is in better shape. So I'm pretty sure the banking sector will be able to sustain this crisis, to go through it, and support the economy when needed. Clearly, the profitability of the banking sector will decrease substantially this year, predominantly due to increased risk costs and provision for potential loan losses. That's obvious, and probably next year. But as I said, the profitability was so high before we went into this crisis, and the capital and liquidity buffers are so sufficient that I think we have enough cushion to sustain that. So overall, I think the banks will support the economy. We need to remember that in the crisis as deep as this, the credit demand normally subsides. So what you saw actually yesterday in the National Bank of Ukraine publication, they also believe that the credit demand will decrease, especially for investment finance and consumer lending in retail areas. So what will probably be still in demand is a working capital financing just to go through this crisis, but overall credit demand will subside. So if you match the credit supply capacity of banks and credit demand, I think it will be all right, and the banking sector in Ukraine will support the country and economy in this crisis. On your, I believe the first question was also referring to Matteo's comment on the banking law. Look, this was a milestone. And whatever the challenges will be in the future, potentially in the constitutional court or even abroad, I think this is a major milestone. And I think it will be very difficult to reverse this law or to cancel it, to amend it. And simply because the law essentially introduces the international standards of bank resolution regime, which is actually implemented in many countries. I know what I'm talking about because I used to work for the International Monetary Fund for more than 3 years, exactly in the division which is called Crisis Preparedness and Management, which deals with bank resolutions and bank resolution regimes. So this is nothing extraordinary. This is the remaining missing piece of banking legislation, which introduces the major internationally renowned resolution tools in the banking sector. One of those principles is very simple. It's an international principle that in case the regulator made the wrong decision of taking the bank out of the market, the shareholders may claim the monetary compensation, but no it's impossible to reverse the decision and put the zombie banks back to the market. This is a major international principle. There are many shouts and yells how institutional it is, but this is applied in many countries in the world. So we just follow. So that gives me hope, actually, that this is a major milestone, which is irreversible, basically. That's basically the first question. The third question was, I guess, more broader one, right?
Relation of credit in a country to its GDP, and in Ukraine, it's times lower than in other comparable countries.
Yes, I guess your question takes me back to the dark days of 2014, where we were going in the previous crisis. I mean, yeah, you can't compare this. Ukraine went into this crisis with a debt of GDP of about 50%, or 50 plus a bit, which is not low, but clearly not excessively high. And then the IMF believes that 60% is roughly the threshold of kind of safety. Clearly, Ukraine is an open, small open economy, which is vulnerable to shocks. So it needs to have a bigger cushion. In other ways, it has to have ideally lower debt to GDP ratio to sustain the crisis. But I believe that 50% going into this crisis will help Ukraine to successfully muddle through this crisis, particularly given the IMF support, which is forthcoming. So I think it's good enough. It's not ideal. The debt to GDP will definitely increase around the world in all the economies, including Ukraine. And clearly there is a natural concern that the debt overhang, which was large before the crisis globally, will get even bigger. And then basically once the crisis is over, the governments around the world, starting from the United States and probably some European countries, will need to go on the fiscal consolidation path to decrease this debt burden. So will Ukraine. But at the moment, the priority is clearly to fight through the crisis. So I believe, all in all, Ukrainian macroeconomic position, as I said, is the best in 30 years. We could always say it could have been even better, but I think it's good enough for us to go through this crisis, particularly if there would be no second wave of coronavirus, which of course is a black swan and a potential tail end around it.
Thank you, Alexander. This is encouraging. Lena, now riding on this positive wave, since you said that there's a number of opportunities for private equity this year and next year, does Horizon Capital plan any new investment this year, next year, distressed, devaluated investment? And in general, what will be your focus of activities this and next year in terms of investment, new or existing ones?
Well, Nicholas, we're in a very fortunate position. You know, the market knows that we launched our latest fund. We officially announced it last year. We actually closed it December 2018. $200 million fund investing in growth equity. We have already invested in 10 companies, about half the capital in 10 companies in the new fund. So we are in a very good position. We are in a position where we have 100 million in our fund to invest. And I want to quote David Rubenstein, I mean, don't be a genius and buy cheap what you know nothing about. So we definitely are not going to do that. We never convinced our limited partners, our investors, that we are a firm that focuses on distressed or turnarounds, etc. We are classic growth equity. We've always been growth equity. We will continue to stick to our knitting. We think there are a lot of opportunities. We will continue to execute on our investment thesis, which is focusing on domestic champions, export champions. We like IT, food and agro, light manufacturing. Those are export champions. Those are very strong and will continue to be strong. We like domestic champions that have an IT skew to them, of course. E-commerce, logistics delivery, fintech, online education, those will do very well. Classic businesses, going up higher up the value chain. I mean, if I look at, what I agree with Alexander, Ukraine is in a very good position. Ukraine is, the companies are resilient, the founders are strong. they have been through the last 5 years what others have not been through. And I think that Ukrainian founders will do well. And ultimately, I think all of our businesses, Matteo, Alexander, it's about the people, right? I mean, when you go into a relationship, it is about the founders, it is about the management team, it is about their execution, their business model, that we will continue to focus on first and foremost. So yeah, we are looking at opportunities. We actually have a couple deals right now that are in due diligence. We will be presenting them to our LPs at our May meeting. And we of course, we will be, we do think there are some businesses where the business model will remain challenged. Okay, there's no doubt about it. We've never invested in the past in airlines or the travel business and entertainment business, etc. That has not been our investment focus. Mm-hmm. So there will be business models that change. But for us, we stick to our knitting. We're doing growth equity. We're focused on the expert champions, and we think there's lots of opportunities. One that I want to go back to, Nicholas, is what you said about manufacturing. Yeah. I'm a big proponent for manufacturing. I think that there's going to be many companies that look at their global supply chain, that look at, does it make sense that all of my manufacturing is across the globe from where my customers are? And I think that Ukraine is very well positioned. You know, we neighbor 4 EU countries. We already have seen a shift in manufacturing towards Ukraine. You've got 40,000 people that are working in German manufacturing companies in Western Ukraine. I think that trend will continue. I think that Ukraine, you know, thank God, Alexander, with the banking law that we have adopted, we are unlocking 10 billion in financing. Ukraine is not going to be on its own through this crisis. That's very important that we be a strong member of the global financial community, and everyone, the government, to private business, to investors, to people who are committed to Ukraine, need to be thinking post-crisis. How does Ukraine capitalize on this? Our food and agriculture is unparalleled. If you look at even planting, we've already planted, we're in the midst of planting, you know, over 70,000 million, I mean, we've got over 72% of the planned area versus 60%. So we're already planting. Our food and agriculture will remain strong. Where are there opportunities higher up the value chain? Where are there opportunities to go, not to sell commodities and earn, you know, a few points in terms of margin, but actually invest in greenfield production, in processing plants that not only feed Ukraine, but are export champions regionally and globally. On manufacturing, Nicholas, you and I have talked a long time about industrial parks and industrial platforms and how Ukraine can transform through proper planning, laws, support, etc., can do much more in making Ukraine a manufacturing hub for Europe, for Middle East, for Asia. We can do this, and I hope that a broader view is being thought, you know, relating to this. In terms of tech, you know, tech, it is now the #2 export sector. You know, tech, if you look worldwide, and there's a lot of news about large tech companies who are firing 10, 20% of their people. You look at Ukrainian programmers. Ukrainian programmers can do so much more with much less. Again, they are in such a competitive position relative to their peers in developed markets. So I expect that, you know, this $6 billion industry has the potential to double plus in the years ahead, because the smarts are there, the talent is there, and the cost competition is there. So I expect our outsourcing companies and our product platforms to succeed in a way that is much more noticeable in the months and years ahead.
Thank you, Lena. Thanks a lot. Matteo, now the question to you. Given the old revaluation that you must have done in the current environment, how much EBRD is going to invest in Ukraine or planning to invest in Ukraine this year, next year? And what will be your investment focus? And has it changed? and not just investment focus, but also your approach to funding businesses in Ukraine? Has it changed? Has it become more flexible given the circumstances?
Before I answer this question, let me maybe reiterate a few points that have been made by Alex and Lena. The first one is, I remember about this time last year, I was asked to write an article for Kiev Post on my impression after a few months in the country. And I declare unreserved optimism because of the human capital of the country. And that permeates every sector, not only an economic sector, but also social sector. Civil society is incredibly strong in the country. The ability of entrepreneurs to show resilience and stamina is impressive, and we see that in our portfolio of companies. But also, notwithstanding the bumpy road behind and ahead of us, which is normal for every country in transition, we see that the reform momentum is still there, and the direction of travel is actually a good one. And indeed, the approval of the banking law yesterday is a good testament of that. So human capital is incredibly strong in the country. I fully agree with Alex that Ukraine has got into this country in a very, very good shape because of the work done by the past ministers of finance, and which brought the country to a level of public debt to GDP of 50%. And coming from Italy, I'm incredibly envious of that. But indeed, the work done by the MBU in cleaning and stabilizing the banking system has been absolutely stellar. And that's why now the country is as a system is in a shape where we can deploy both fiscal and monetary measures to keep the economy going until there is the rebound, which again, we hope is going to happen next year. So I completely agree with Alex's assessment in that sense. And indeed, this will be anchored by the IMF deal. So I'm pretty optimistic about how we're going to get out of it with a number of opportunities. Now, what is the role of the BRD in all this? Well, we maintain the same ambition we had last year. So we want to invest about 1 billion euros this year in the country. And this in the context of a number of instruments that the BRD as a system is putting in place. So we have, back in March, our board approved what we call a solidarity package, which has been enhanced a few weeks ago, and hinges on 4 pillars, basically. One is that we're going to provide liquidity lines and working capital lines and restructure our existing portfolios companies, or existing exposures to portfolio companies. And we have an envelope of about 4 billion euros for that. We're gonna increase our trade facilitation lines to SMEs and exporters, which is going to be very relevant to bolster the rebound of the economy. We are going to, well, we are already streamlining the approval processes of the other products that we have in our arsenal, which are risk-sharing facilities or direct financing facilities or financing facilities to our partner banks. And we have put in place what we call Vital Infrastructure Support Program, which is a program by which we are going to provide liquidity lines to vital infrastructure providers in our countries of operation, so SOEs or municipal companies or a mix of the two, in order for them to weather the crisis and continue infrastructure development. Overall, this translates in about 22 billion euros that we want to put at work in our region between 2020 and 2021. And indeed, Ukraine, as I mentioned, is not an exception. We want to maintain the same level of investment of last year. We see a gradual transformation of the pipeline. But here is the good news, which is probably not a statistical evidence, but anecdotally is quite important for us. A number of our private sector clients are indeed asking us for working capital, and we are helping them in that sense. But the vast majority of them are actually maintaining their investment plans, which I think is a very good sign of optimism and resilience.
Which is actually
and hopefully
Europe. I'm sorry for interrupting. Just recently, I read, I think yesterday, an article in the Financial Times that showed two graphs. The capex capital, demand for capex capital in Europe plunged by like 26%, and then the demand for working capital surged almost by the same amount. So what you're saying is that your clients are actually maintaining the capex spending.
Well, many of them are maintaining that those plans, and I think our role is, of course, to support them. But the signal we get is actually very positive.
Okay.
And
that's encouraging.
If we look at the portfolio between beginning of the year and the portfolio pipeline between the beginning of the year and end of June, I think roughly 20-30% of it will be crisis response, if you like, or liquidity lines or working capital lines. But the vast majority of it will be still investment lines for both private sector and public sector. And there is a good segue to the public sector. There, again, we are considering providing liquidity lines for a number of SOEs which are in need because their collection of receivables has decreased dramatically and will probably remain at a subdued level for a few months. But the government is absolutely determined to continue infrastructure development. And that is another good element and a good ingredient in the rebound of the economy, being that in the energy sector or in the transport sector, roads or railways. And therefore, for us, it's going to be a mix of working capital and investment, but it's not a complete shift from investment lines, which is our core business really, to working capital.
Understood. Thank you, Matteo. Thanks a lot. Now, Alexander, so almost, not almost the same, but comparable question to you. Is your bank ready to offer flexibility and restructuring to current clients, when and if needed? And what will be the focus of Raiffeisen's investment in Ukraine this and next year, and how it will change, if it will at all, in respect to what businesses and sectors it invests in, and in respect to how it evaluates current and potential clients?
Thank you for the question, Nicholas. Well, the answer is quite simple. We are not only ready to offer restructuring to our clients, we have been doing this for quite some time already. Just to give you a bit of a feeling of the magnitude of the restructuring request we've got. So we so far offered restructuring to about 10% of our retail private clients, private individuals, about 16% of our small, medium enterprises clients, 16, and about 5% of our corporate clients. It's obviously the difference in percentages explained by the fact that the larger companies have, are financially stronger and have a better cushions to sustain the crisis. We may still see more of the corporates coming for restructuring, but so far, as I said, it's been 5% of our client base. So we are doing this really. We are offering, approach is not exactly the same for retail and small, medium enterprises. It's often a portfolio approach. We just create restructuring packages and we offer them at scale to our clients, and we do that also proactively when we see the clients really need it. And in corporate space is basically more, we do the analysis, we expect the clients to come, they come to us, and then we really on a case-by-case basis negotiate, because it's a large corporate business or large and mid-corporate business, that's a case-by-case restructuring. So, but either way, we are doing this, and I think the scale is meaningful. It will increase further, but so far we've been doing this amicably with all clients. The tools are a mix of traditional tools. It's basically credit holidays. It's rescheduling interest payments, rescheduling principal payments, sort of doing sort of capitalization of interest, sometimes even the refinancing. So it's a mix of different tools, and obviously the mix depends on the customer segment. But essentially, so far we have successfully and amicably restructured a bunch of credits that we have on the books, and we'll continue doing that. But that is our support for Ukrainian economy and the borrowers. So we need to be with them in this crisis. In terms of our strategy and priorities and our investment focus, I don't expect honestly that our portfolio composition will change significantly. So you probably know that Raiffeisen is the largest probably lender to Ukrainian Agricultural Center, which is about 40% of our portfolio. It's a very large lending portfolio in agriculture. We don't expect it to change. And I think if you look at agriculture, this is actually one of the most resilient sectors in this crisis. There is some impact in agriculture, but that is not related to coronavirus. It has something to do with the drought in the southern Ukraine, where clearly affects some of our clients and some of our portfolio, but the rest of agriculture remains resilient. So we'll do some, maybe sector diversification a bit here, a bit there, but broadly our portfolio, loan portfolio composition will remain roughly as it used to be.
Understood. Thank you so much. Thanks, Alexander. So we are very good with timing so far. We have one last blitz question to you all, but I really want to end on a practical note. So to all Ukrainian businesses and entrepreneurs who are watching us and listening to this, what would be your number one practical advice in terms of what they should do today to withstand, survive, and maybe even prosper in this crisis, in the current situation? Yeah, starting with you.
Pick up the phone and call Horizon Capital. No, just, no, seriously, look for opportunities, to look for equity opportunities, because I think that crises, they breed opportunity. And this is the time that well-capitalized companies, they are able to gain market share, to leap ahead. And we see that among our portfolio. I mean, look at, Rosatka, they've added 20,000 square meters of space. I mean, they are doing so much in terms of corporate social responsibility, in terms of getting packages out to pensioners, and so much more of what they're doing. But they are doing very well. Dobrobut, same thing. I mean, they're on the front line along with public hospitals of this crisis, opening up beds to treat coronavirus patients. At the same time, I mean, they're continuing their M&A, they're continuing their CapEx, and I agree completely with Matteo that that infrastructure is very important. So for going back, look at the opportunities. You've already done, Ukrainian entrepreneurs have done the work in terms of being lean, in terms of being resilient, in terms of liquidity, in terms of, cash is king. Now they can go further and capitalize on this opportunity to grow their business and gain regionally and globally.
So for all of those who are whining for not having money or complaining about not having money, this is your fairy right there.
No, Nicholas, like you have EBRD, who's investing $1 billion. You've got Alex, who's the biggest banker. You've got me in terms of the largest private equity with 100 million. I mean, Nicholas, you haven't talked about UFuture and so much of what you've done. By the way, I want to take this opportunity to say how proud I am. Alex, Raiffeisen, Horizon, you guys provided debt. We provided equity for BF Pharma. I'm really proud of the fact that BF Pharma is on the front, has entered an international alliance to find plasma-based treatments for coronavirus, and has been approved and is already treating and doing clinical trials in 5 hospitals. That would not be possible without the 75 million investment, debt, and equity. I'm really proud of that.
Absolutely.
You guys are, you know, we're all behind you.
Thank you. Thanks for everybody involved. That's really a crown jewel in our portfolio, and I'm sure it's the same with yours. Thank you, Lena. Matteo, what is your one most important advice to Ukrainian entrepreneur? What should he or she do to do well today?
I really don't think that Ukrainian entrepreneurs need my advice. They know what to do, and they do it very well. But I go back to what I said at the beginning, and what Lena also said. There is a light at the end of this tunnel, and there are a number of opportunities where Ukraine is very well positioned to excel, and one of them is indeed onshoring of production facilities, and given the human capital in the country, the STEM level, the process of increasing the value-added sectors presence in the value-added sectors in the country. I think Ukraine and the Ukrainian entrepreneurs are incredibly well placed not to let this crisis go to waste. So again, look for opportunities, but they know that they're doing that. They kept doing that forever. So and that is, I'm stating the obvious, really.
Yeah, and also call you, right? They call Lena, correct?
Well, they are doing that. That's why we continue providing finance for investments, and that's why I'm very much uplifted by this thing.
Thank you, Matteo. Alexander, what about you? What is your number one advice to Ukrainian entrepreneur?
Nicholas, could I have two, please?
Yeah, you can have three.
Well, one I guess is more generic. I would advise everybody, also the business people, to stay optimistic. I mean, we three of us have, probably four of us have quite massive crisis experience here. So we all know that it's much easier to go through any crisis by having the optimistic but still realistic view of things. And more specific advice, probably, it's use your time to have a look at the business model, because the coronavirus crisis will definitely have an impact on business models in many sectors, including banking. So maybe the product portfolio would need to be revisited to see what features are still relevant for clients, what features are not, or what products are more relevant than others. But definitely the distribution mix will need to be analyzed, scrutinized, and properly changed. The clients will no longer buy products and services the way they did. The world is moving online even faster and becoming digital than it used to be before the crisis. So that will have a major impact on the distribution mix.
Thank you, Alexander. Well, ladies and gentlemen, for me, that has been a tremendous pleasure, really. I really enjoyed this talk. I hope we can continue it in the future, preferably with a bottle of wine along our side, somewhere in an open terrace in beautiful green Kiev. But until then, I really hope that you stay all safe and healthy. And you know what? One takeaway that I can really make out of this panel is that even though indeed the world we're living in is entirely different from what it used to be when we had this panel at Kyiv International Economic Forum in fall, but your responses, surprisingly, are essentially the same. You are very positive about Ukraine in a lot of different ways, being realistic, being cautious, still very positive, and that is very encouraging to, I'm sure, to me, and I'm sure to everybody watching and listening to this. So thank you very much for all the work you're doing for Ukraine. Thank you for your time to take this panel. I hope to see you all soon, and definitely let's hope that we're going to hold Kyiv International Economic Forum this year and have another amazing discussion. Thank you, everybody.
Thank you very much.
Thank you so much.
Thank you so much. Thank you, everybody. Thanks. Have a good day.